Okay, everyone. Again, this is Jay with Icon Systems. I have on the line with me Douglas Kossel from Kossel and Associates out of Ohio. Just to give you a little bit of background on Doug, him and I did a webinar a few months ago on pastors' payroll, and we decided to do this one along with a couple others in the future that'll be announced. As far as his background, he is an enrolled agent, and I'll let him, if he wants to describe that a little bit more, I'll just give you a summary of that. That just means he's authorized to practice for the IRS. He takes, obviously, training to do that above and beyond what you'd probably find in most accounting areas. And then he also has a PhD in administration, I believe, as well. And he's also been an accountant and treasurer of a church for 10 years, also a controller of a multi-million-dollar healthcare company in Cincinnati for 4.5 years. He was also an administrator and a president of a Christian college for 5 years in Wisconsin. He was an associate pastor for 10 years and also a youth pastor as well. So he has a very unique insight into how churches work. Because he was obviously an administrator, a pastor. He's kind of had his, been kind of in the shoes of different positions throughout the church. And then he also has the business side where he has the enrolled agent qualification and also the PhD in education experience. So he has a very unique perspective, and I'll turn it over to him, and he can kind of describe anything else that he thinks will be important for you guys to know about him. Okay, Doug?
Okay, thank you. Appreciate each and every one of you being here today. What we're going to discuss today is very important. One of the key areas the IRS is looking at, and actually going out specifically auditing churches on their payroll accounts, choosing out, it was noted about 500 a year, looking at them, which is really a small amount, but it's an important issue that needs to be looked at. There's been many court cases, and we'll discuss a few of those a little bit later. As he mentioned, I am an enrolled agent. There's about 45,000 of us in the U.S. We're really the only group of people that's taken a test, an exam given by the IRS on our tax knowledge. We're also required 72 hours of continuing education every 3 years. Most of us probably do 30 or 40 hours of continuing education every year, especially if we specialize in certain areas like I do with the nonprofits and especially with churches. Yes, I've worked with churches since the early 80s, and I am currently an associate pastor part-time at my home church, and our youth pastor left, so I'm probably one of the oldest youth pastors in the country right now. Took that position until we could find another youth pastor, and but I've enjoyed working with the youth, and the kids like it. My wife's not too sure. I go out and do some of the stuff with the kids, and I told her I will wear my helmet and my knee and elbow protectors as we go out and do some of the stuff with the teens, but it's been enjoyable. But one of the things that I do also enjoy doing, in it's a critical area, is helping churches understand, not only the accounting issues, but the tax issues of getting things done right within the churches and or the ministries. And today's world, it's become more critical that these things be done in the right way for a couple purposes. One, I don't think you want your name in the paper of being caught doing some things wrong and all of a sudden having fines and penalties, and it gets out into the community that the church wasn't paying people right, or got fined by the IRS or something. That probably wouldn't be a good testimony for the area. But other than that is just being a good steward of not only your monies, but just doing things correctly. So as we go through this, one of the first things, and you can read this is the disclosure. You can probably read it faster than I can go through it, but it's just one of the things that we just let people know up front with that. So I'll give you just a couple seconds here to read that real quickly, and we'll go on to the overview slide. Okay, overview. This is what we're going to talk about today. Introduction. I'm just going to introduce and give you some terminology, just cover a few things that's applicable to whether you're a nonprofit or a business here quickly. Then we're going to look at the basic tests to determine employee status. There's actually 5 of them. We're going to go through each one. I'm not going to spend a lot of time on this because this is an area that I could take all day just going through these tests and explaining the application of each one of these factors that's involved. But we're going to go over them briefly so you understand that these are critical things. If you're going to put someone on your staff that's on a 1099, you must meet certain factors and requirements. We're going to talk a little bit about the dual status of a minister. Then we're going to talk about reporting employee income taxes, and then consequences of having self-employed reclassified as an employee. And then through all of this, we'll mention a few things about AGI, Minister Social Security, some of the court cases, treatment of various benefits, IRS audit risks, and penalties. So just kind of write down your questions, or I believe you can actually write them in as we go along, or give them to Jay as we go along there, and he'll have a set put together, and then we'll deal with those at the end of the webinar. So some basic definition is there's really 3 basic classifications that we'll have with any business or nonprofit that we have to look at. Some of these are not applicable to nonprofits, but a basic understanding, when people hear these, sometimes I get questioned on some of these. You know, it's critical as the employer that you correctly determine whether the individuals providing the services are employees or independent contractors, and making sure that you understand what they are. If you incorrectly classify an employee as an independent contractor, you can be held liable for all the employment taxes for the worker plus the penalty, and this is what we'll cover a little bit later. Very basically, an independent contractor, who that is something that we have a set of items that we'll cover exactly what they are in one of the upcoming slides. Also the employee, which most people are employees. Most people have had the W-2 and employees for some companies, so that's pretty straightforward. But the 2 that gets confusing at times are the next 2. That's what we call a common law employee. The common law rules, anyone, basically the definition is anyone who performs services for you is your employee if you can control what will be done and how it will be done. To determine whether an individual is an employee or independent contractor under common law, the relationship the worker and the business has must be examined. That's pretty much what the deal is, and this is what we'll look at a little bit later. But there's 2 classifications under there. There's a statutory employee, which really is an employee that the Social Security taxes and Medicare taxes are being paid for. Give you an idea, it's like an insurance agent that's selling insurance policies. Could be a statutory employee. They're not getting paid on 1099 even though they're getting paid commissions. It shows up on a W-2. They're having federal taxes withheld and Social Security being withheld. A driver who distributes beverages other than milk could be a statutory employee. Someone who works at home on materials or goods that you supply, or person or a business supplies, and they return it to them. A full-time traveling salesperson. These are people that would be classified as statutory employees that some people would think they're getting paid commission, but it shows up on a W-2. The other one is statutory non-employees. Those are basically where you get involved with direct seller, basically licensed insurance agents could be a statutory non-employee and be reported on a W-2 also. So those sometimes come up, well, what about these? Because people will be reading publication 15 that talks about payroll, or publication 15A. These are brought up in there, and people get confused of what these are, or why they couldn't use them, or why they're reporting that. So these 2 normally would probably never be involved with the church or a ministry in any way. So we're back to the independent contractor and employee. So as we go on, one of the things that we want to talk about is the IRS's payroll audits. As I mentioned, they are selecting nonprofits. They are believing that they can collect a lot of unpaid taxes, interest, and penalties because churches or nonprofits have been classifying people as 1099 on 1099s as self-employed when they should really be employees. And what they're checking is when they do these audits is your payroll tax filings, are they on time, doing it in the right way? Do you have W-9s on file? That's anyone that you're going to give a 1099 to, including a missionary coming through. You should always have a W-9 on file. It has nothing to do with the $600 that you would have to pay them to minimum requirement to issue a 1099, but this is something you should have on a file for anyone that you're giving them money to that's not in a business like a regular business downtown that's incorporated. Should be on file. Also your W-4s and then proper classification. These are what they're looking at in these audits. There's 5 basic tests when we look at employee versus self-employed. And there's a 20-factor test. That's the original one. There's the tax court's 7-factor test. There is the Supreme Court's 12-factor test. Then there's a common law employee test, and then the corporate officers test. So I know that you look at this and say, well, what are we going to do? Well, one of the things I teach a lot of businesses when we do this is just regular businesses is we talk mostly about the 20-factor test or the Supreme Court's 12-factor test is what we do. And we talk a little bit about the corporate officers test too, because there we're dealing with corporate officers there, and actually with churches you have corporate officers too if they're incorporated in a state. But there's a lot of detailed information that can be found in the resource book, 2015 Church and Clergy Tax Guide that Dr. Hammer puts out every year. It's about 700 and some pages long. It's a good reference guide for every church to have. Go out and purchase it. You can get it on CD or you can get it in hard cover. It's about 8.5, 11 size pages. And there it goes through the different court cases and examples of what we're going to be talking about today. So like I said, we're going to cover this, but we cannot cover this in detail without spending about 8 hours on this. But it'll give you a general idea of some of the things that you're going to have to look at and do in deciding whether this person is employee or self-employed, or whether you're going to handle the pastor as an employee or self-employed. Some of the things that we look at here is some of the differences when they are handled as employee versus self-employed. When we look at the pastor, let's just talk about the pastor here, looking at the pastor as employee or self-employed. When a person is an employee, the employer and the employee each pay 7.65% of the employee wages that goes to your Social Security and Medicare. When they're self-employed, they pay the full 15.3% on net income. Now remember, ministers are, and we'll cover this a little bit more later, but ministers are always considered self-employed for Social Security purposes, and they pay accordingly. They also pay Social Security the 15.3% on all their housing allowance, or the value of the parsonage that is the fair market rental value of the parsonage, if there's a parsonage that goes with the church and that's where the pastor is living. Now when it comes to income taxes, employee reports, of course, on a W-2. The audit risk is low. Some fringe benefits are tax-free. When we talk about some of the fringe benefits, we're talking about medical insurance premiums. You know, that comes off the top. Term life insurance up to $50,000. That cost can be not added to the income. Amounts payable to employees for sickness, accident, or disability for employees with a financial plan there, or some of the cafeteria plans. These are what we call tax-free benefits. And then any unreimbursed employee expenses that they might use, like the 2106 for, church doesn't reimburse them or ministry doesn't reimburse them for some things, they could apply that, but it'll flow to the Schedule A, and it's subject to that 2% floor. Where with a self-employed, they see their income on a 1099 miscellaneous, they use a Schedule C, their audit risks are much higher. Some fringe benefits are included in their income and would be taxable, and the unreimbursed expenses can be deducted directly on the Schedule C, and there's no relationship to the Schedule A or subject to the 2% floor, which is 2% of whatever their AGI is. They can't include, just like medical, it works the same way, the 7.5% to 10% on the medical, depending what your income level is, you can include as medical the same thing at the 2% floor. So let's look at the 20-factor test. This was a revenue ruling in 8741. You could just look up revenue ruling 8741. This was the original test to aid in determining the status. There's considerable overlap between the different tests, so it's not like you got 5 different tests. There's a lot of overlap between these tests. All of them should result in the same determination, no matter which one you use. But when you talk about what the IRS originally issued, you talk about the tax court factoring test, you talk about the Supreme Court's factoring test. You really come down to a point where it's pretty solid now through the tax court cases and through what the IRS has written that this is what you have to look at if you're not going to claim an employee or someone that's working for the church or ministry as an employee. This is what you have to look at to make sure. There are some other considerations, but there's only a few. It might be a contractual consideration, it might be a theological consideration. There's a few things that can come into play as part of the final consideration on this, but there isn't many that takes part in this now. So in the 20-factor test, there's 3 sections to this test. And the first one is control factors. And there's a number of them, and as we got marked here, the contractor, the employee, we show the employee provides training to the worker. Well, the employer provides the training to the worker. Well, that's considered employee if they do that. Worker works on site, employee. Worker works off site, that's a contractor. Company supervises worker's job, employee. Worker has regular work hours, employee. Worker has irregular work hours, probably a self-employed contractor. Employer sets up work hours, and that's an employee. So when we look at control factors, all of these tests have control factors. Who's controlling that person? And the next section is financial factors. Is a worker salaried? He's probably an employee. Employer sets hourly rate, probably employee. Employer provides tools and equipment to the worker, probably again an employee. Worker invests in tools and equipment for use on the job, where they go out and purchase their own tools and equipment, probably self-employed. Worker receives benefits, employer is probably employee. Self-employed normally don't receive any benefits. Worker has ability to have profit or loss from the job, probably a contractor, self-employed, because their profit or loss goes up and down with it. Worker pays own expenses. That's probably an employee, or I'm sorry, that's probably a self-employed person because they pay their own expenses. They might go out and hire an assistant, where when I talk about this, in most churches, the church hires a secretary and assistant to the pastor, not the pastor hiring those and paying them all the funds that the church is paying him. The next one is relationship factors. Like I said, there's 3 groupings of factors here for the 20-factor test. Again, worker employer has a contract for services or the products. Well, in this case, with churches, it'd be the services. That'd be probably a self-employed. Worker can hire others to complete the task. Again, I don't see too many churches hiring a pastor that then goes out and hires another pastor to kind of come in and take care of his job task or do hospital visitations and paying him or paying that person out of their pocket or out of the money that they're receiving from the church. But a self-employed person could do that. Worker and employer have a long-term work relationship. Well, when you start getting longer term, then that's probably an employee. Work relationship relates only to contract work, probably self-employed. Worker performs similar projects for other companies, probably self-employed. Normally a pastor is a pastor for one church, or we have one here in Cincinnati. She actually handles 2 different churches. She has 2 services in kind of a poor section of Cincinnati. They can't find a pastor for another small church. She takes care of both of them. Worker works only for that particular company. Doesn't go out there and work for multiple places, and that's probably an employee. So when we look at these 20-factor tests, this is what originally came out. Well, of course, some people were trying them find ways to get around having the pastor as, and we'll talk a little bit more about what some of the benefits are, and some of the pros and cons about the W-2 versus 1099, why some people do one or the other. But these 20-factor tests came out. Of course, IRS would come in, audit, play those that were on 1099s, or churches giving 1099s out, and in some cases, churches weren't even giving 1099s out when they should have been. They were giving a letter saying, well, Pastor, we paid you X number of dollars for the year, and that's all they would give them. IRS started to audit and reclassify them as W-2 employees, and that's where some of the challenges started. So one of the first ones resulted in the 7-factor test. Both these cases, the 1994 tax court rulings, Weber versus Commissioner and Shelley versus Commissioner, both cases were involved with ministers. Both rulings were different. They're opposite rulings. One W-2, the other one, okay, you can be a 1099. But the court used these 7 factors to determine the correct tax status for both these individuals in both these cases. Here are the 7 factors. You'll see that they're somewhat similar to the 20 factors. The extent to which the services rendered are an integral part of the principal's business. So it's part of the business. The extent to which the services is part of the church's business. The pastor being the pastor, he's working with the church there. They looked at that. What's the relationship? Is it permanent? It's more likely to be an employee. If it's not permanent, where it kind of comes and goes and used as needed, then it's probably a self-employed. So that was one of the additional factor they looked at. The amount of the alleged contractor's investment in facilities and equipment. What did they invest in the equipment? What did they invest in the facilities? Was looked at. The nature and degree of control by the principal or the nonprofit corporation or organization. What's the control? How did the church control that person, or the board control that person? How much control was there? And what was the contractor's opportunities for profit and loss? Did the pastor gain or lose by the church growing or diminishing in size? That was another one they looked at. And the relationship. What was assumed relationship or contractual relationship that was there? And then the last one, can the organization discharge the individual? This was another important. So is there, within the bylaws or within the board or however it was set up, could that organization discharge that individual? So these were the 7-factor tests that came from the tax courts. Well, after this, a short time after this, and actually this is 1994, there was a Supreme Court that was actually 1992 with Nationwide, and kind of got finalized in the next couple of years, and this came out at that point in time, and that was with actually Nationwide and Darden. Now these are the 12 factors that came out there. The hiring party's right to control the manner and means by which the product is accomplished, which basically indicates a worker is an employee. Does the church say, look, Pastor, we're expecting you to be here 4 days a week, and we're expecting you to make the hospital calls on a regular basis and visit people and do this and this and this, and they're expecting a certain amount of work during certain periods of time, and with that, that's what they're talking about there. Is there skill required? The more skill that is required, the more likely the worker is self-employed. Again, there's a relationship there. The source, did the workers provide their own, or are more likely who provide their own tools, who provide their own instruments, who provide their own resources, they are more likely to be self-employed. Where was the location of the work? It was on like the church's or ministry's property, or was it out of the person's home? So again, where's the location of the work? The duration of the relationship between the parties. The longer the relationship, the more likely the worker is an employee. So this was part of the looking at the indication of what this relationship is. Whether the hiring party has the right to assign additional projects, to the hired party indicates a worker is an employee. Can church add additional work and projects? in there? Can the board come along and say, look, we want a revival this fall. We want a missions conference next spring. We want a vacation Bible school. We've not had those before, but this is what we want to do. Indicates that it's employee. The extent of the hired party's discretion over when and how long to work. The more the discretion, more likely the person is self-employed. Yeah, I know some pastors come and go as they please, and no one really says anything. There's other churches I know that, oh man, the pastor better be there by 9 in the morning and really can't leave till 5 in the afternoon. It's like any other job. So there's, that's looked at too. The method of payment. Employees are paid by the hour or week. Self-employed workers are paid by the job. Now, I've had some churches say, well, we budget $50,000 a year for the pastor, and so our project, I guess, is him pastoring the church for the year. And then they pay him through a payroll system, every other week or something like that. So, but again, what's the method of payment? The hired party's role in hiring and paying assistants. Does this person hire and pay their own assistants? Employees do not. Again, I don't know of too many churches where they give the pastor X number of dollars. He goes out of that. He goes and hires his own assistants and secretaries, etc., to get the work done at the church. Whether the work is part of a regular business of the hiring party or the church. An employee's work is part of the regular business of the employer. Yeah, what they're doing as a pastor of the church would be part of it. This is church needs a pastor, church needs an associate pastor, etc. This is part of the work and the normal work of the church. Whether a hiring party is a business, employers are more likely to work for organizations produce services or products to the public, which a church normally is. It's operated, we talk about nonprofit, but in a sense it's operated many of the same ways as a regular business is. The provision of employee benefits. Employees are more likely to receive fringe benefits. Self-employed do not. And many times the self-employed can't take some of these deductions like a employed person can, an employee can from the employer. So we have the 20-factor test, then the 12 and the 7, and these are the basics of what needs to be used and looked at today, and documentation to be made, and we'll talk a little bit more about that as churches choose. But this is a major problem, especially with smaller churches. I see a lot of them trying to do this on 1099s, trying to do their secretaries on 1099s and everything in the world, trying to avoid W-2 employees with that. But as the IRS is out there looking at this more closely, the consequences can be quite costly to the organization. When we look at the common law employee test, it's really a 3-factor test, and it came about after the IRS published the 20-factor test. The common law rules, the facts that provide the evidence of a degree of control and independence falls into 3 categories, basically behavioral, financial, and type of relationship, which when you look at the 20-factor test, everything was grouped into a financial, behavioral, or relationship type. Control, talk about behavioral, talks about control, financial, and type of relationship. The 20-factor test got broke down into those 3 groups. And more of this information and much more detail on how to look at the behavioral or financial or type of relationship can be had at the IRS government. You click on Help and Resources, click on Business, click on Small Business Self-Employed, and then you'll see the independent contractor down towards the bottom in a list. You click on that, and then you'll see basically this page here. You click on Behavioral, Financial, or Type of Relationship. It takes you right there. The copy of this presentation will be made available to you. So you'll have a copy of these PowerPoint slides. They are copyrighted. We just asked you can use them in your church and everything, no problem there. We just not looking to see them being sold somewhere out there. Now, the corporate officers test is basically, if you jump down to the second one, or the third, the bottom paragraph there, the IRS Publication 15A states, for employment tax purposes, no distinction is made between classes of employees. Superintendents, managers, or other supervisor personnel are all employees. An officer of a corporation is generally an employee. However, an officer who performs no services or only minor services and neither receives nor are entitled to receive any pay is not considered an employee. Director of a corporation is not an employee with respect to services performed as a director. Now, what I'm getting to this is, in a lot of churches, the pastor a lot of times is the president of that organization or that corporation. Kind of depends how it's filed in the state. So this is why it becomes important that if that pastor or the associate pastor is also a corporate officer, well, then that probably and may also add to the decision or a factoring part that he is or they are an employee. Now, when I get done and get to this point, one of the things I want to look at is your head spinning yet. Because when you look at this, in 1997, a federal appeals court ruled in favor of an Assemblies of God pastor that he was self-employed. And thus continues the confusion. They used the Supreme Court 12-factor test to get to that point. And let me just give you some key facts about this case in particular. The salary was based upon the church's income. It was not a percent, but if the income went up, he got more pay. If the income went down, he got less pay or no pay. So it was kind of a relationship to the income, but was not a percent. The church paid a portion of his self-employment tax. So they gave him 7.65% added to his income, and they paid a portion of that. They also gave him a housing allowance, and they paid health insurance. He had a church credit card to pay for gasoline. Church made available to him a desk, chair, and a copy machine. And he received a Christmas gift every year. So that was the basic criteria of what was happening. But then the court also looked at some additional facts to rule that he was self-employed, and here they are. He was free to perform other services, weddings, funerals, revivals, preaching, etc., for a fee and not turn those fees over to the church. I mean, you could go out and hold other services, preach in other places, etc. He used his own computer, his own car, and his own library to perform his duties for the church. He was not required to pay for a fill-in preacher when he was gone. So when he was gone on a Sunday, the church took care of a fill-in preacher. He arranged for guest speakers and gave to the offerings that were taken up for them. So he participated in the offerings. And he set his own schedule. He came and go as he pleased. So when the court looked at this, and I forgot one more here, he provided most of his own furniture. Yeah, they provided him a desk, chair, and a copy machine, but everything else in his office and almost everything else that he used, he provided his own furniture. So they said, well, because of these things, that he could be declared self-employed. Now, if I go back one page, if we look at this and we look down where he got the Christmas gift, that would be added to income on the 1099, and then they paid his health insurance, that would be added to his 1099, because then he would take that off on his tax return. So there's a few things that they were paying for him. The 7.65% would be added onto his 1099, and this would all be recorded as income, and then he would appropriately put those on his personal tax return through Schedule C or page 1 on his 1040. Sound confusing? Well, it can be, it will be, and again, no one factor determines the classification. It's a whole, it's the business, the church, a nonprofit must weigh all these factors when determining whether a worker is an employee or an independent contractor. Some factors may indicate that the worker is an employee. Well, other factors may indicate that the worker is an independent contractor. There's no magic or set number of factors. It's not like, well, in a 20-factor test, if 11 of them says he's an employee and 10 of them say he's self-employed, then that's it, he's an employee. There's no set factors that makes a worker an employee or an independent contractor. No one factor stands alone in making this determination. Also, factors which are relevant in one situation may not be relevant in another situation. So again, some of these factors may not be that key in some situations. So this is where it adds to the confusion, because it kind of comes down, when the tax courts or the courts are looking at this, it kind of comes down to how they're looking at it, how they look at the total relationship, or whether this person is an employee or a self-employed person. The keys are to look at the entire relationship and looking at and considering the degrees or extent of the right to direct and control. The right to direct and control is key issues. And finally, this is why I have this underlined and in red, to document each of the factors used in coming up with the determination. This is where I find, and I work with a number of churches that give 1099s to their pastor and maybe their associate pastor, but they've never documented why. They never listed out and created a file saying this is why we're doing this, and that this is agreed upon the board, that this person can be a self-employed person because of these factors and for these reasons. It's very important to have this documentation on file, that the churches come up and say, okay, we're going to handle this our pastor as a self-employed person for these reasons, these factors, and document it. In determining whether the person providing service is an employee or an independent contractor, all information that provides evidence of degree of control and independence must be considered. So people say, well, what do you do? I normally come back to the 20-factor test along with the 12-factor and kind of use both of them and say, look, let's go down this. Let's make sure that we're looking at each of these issues, say yes or no to it, and then when we get done, having a reasonable understanding of why we're choosing to make him self-employed. That's the key. Because IRS is biased. They're going to default to an employee almost all the time when they come in. They're going to say this person's an employee unless you really have documentation to show otherwise. But this is an employee. Then you're going to have to fight to get it back the other direction if that's what you really believe. So this is what's important, is to get it documented, to be very clear on why you came up with that determination, and to look at everything. So you don't ignore some of these factors. You're looking at all these factors and including these groupings of factors in there. So that's just going to help in the long run, especially for those that are trying to use the self-employed status. Now let me talk about the minister's dual status. This is also part of what has to be looked at. Most ministers are employees for federal income tax purposes. The majority of them would fall into this just because of the relationship they have with the church. I know some might argue with me on that, but when it comes right down to the bottom line, most will be employees for federal income tax purposes. But all ministers, that means all of them, are self-employed for Social Security purposes. That service is performed as a minister. They're all self-employed for that purpose. So that's what we talk about, the dual status, when you hear it or read about it. Most ministers are considered employees for federal income tax purposes, but they're considered self-employed for Social Security purposes, which means that they receive a W-2, but they do not have Social Security, Medicare taxes withheld. And I'm going to show you a sample of a W-2. What I'm talking about here, and if you look right here, you'll see that here's the pastor's wages, and then he had some, and we'll come back to the federal withholding, he had some withholding done, but his W-2 should not have anything in these 4 boxes. Nothing. No zeros, no nothing. They're just not there. So a pastor never has anything in these 4 boxes. He should never have anything in those 4 boxes. And some people, the reason I marked this down with housing allowance, this is where it's not required by law, but normally it's a good recommendation that you put the amount of housing allowance in box 14, just like this housing allowance, $15,000 or whatever it might be. Because I found a lot of pastors can't remember exactly what it is or what the church gave them, so then we got to go back to the church or dig through records or minutes of what they approved for housing allowance, and then for us to complete the tax returns. So that's where that goes. But again, pastor, a minister of the church, ordained minister. We'll talk about what makes them fall underneath the minister's guideline here in just a couple minutes, but they do not file this. Now, also a pastor, a minister, does not have to have any withholding, federal at all, on his W-2. So this box maybe have 0 in it also. So all what might show on a pastor's W-2 might be just his income, and if they show his housing allowance, then they would show his housing allowance here. And if they're in a state that has a state tax, they'd show the state wages there. Now in most states you still have to do the regular withholding for the state, so that would show here. And if there's any local, again, that would show in these boxes here. But again, these 4 boxes should always be blank. This one may or may not be blank. We're going to cover how that works in just another couple slides here. But as we move on, I want to just bring up a couple other items here. Filing the Form 8274 is for churches or qualified church-controlled organizations only. You are to file that after you hire employees, but before the first date on which a quarterly or annual employment tax return is due or would be due except for this election. And you keep a copy of this for your records. Now what this does is churches and qualified church-controlled organizations that are opposed for religious reasons for the payment of Social Security and Medicare taxes may elect exemption from the payment of the employer's share of these taxes. So by filing 8274 within the required time period of filing means that a church does not have to withhold Social Security or Medicare for any of its employees or future employees. They do not have to withhold this. They still got to do the federal withholding, except for a pastor. But for a secretary, janitor, they would still have to do the federal withholding and state withholding, but they would not have to withhold Social Security nor pay it. The electing organization must continue to withhold, as I mentioned, the federal income tax on wages, tips, and other compensation. They would still have to show that on the W-2. They would still have to file their 941, the quarterly federal tax return, and they still have to do or the 944 if they're only doing an annual return or a quarterly return, depending on how much their taxes, amount of taxes that they're withholding is on that. The employees doesn't get out of Social Security. The employees are still subject to self-employment tax, a Social Security tax, and files a SE form, that's a Social Security form, with their individual tax return. They pay the full 15.3%. If you look at an SE form, you flip it to page 2, you'll see a line in there of church wages, and that's where you put your gross wages that shows on your W-2 in that, and the Social Security is calculated. So the church might not withhold it, but that doesn't mean the secretary, janitor, and other employees of the church gets out of paying it. They pay it, and they pay the full amount, not just half of it, they pay the full amount. So that's just, I just wanted to throw this in here as extra, because this does confuse some people, because they run into churches that are not withholding any of this. That's because somewhere in the past they had filed this 8274 and they didn't have to. But again, it's after you hire employees, but before the first due date of quarterly or annual employment tax return. So anyone that's been in existence, have had employees already, sorry, you can't go backwards and file this. You have to move on and keep doing it the way it is. This is normally for new organizations, new churches, startups, etc. Okay, let me mention that we're going to talk about who a minister is for federal tax purposes. There's 5 key factors here. Must be ordained, commissioned, or licensed by that organization. And then another consideration, is the person considered a religious leader by the church? Can administer the sacraments, which is like, depending on the church, denomination, etc., could be baptizing, holds communion, marrying people, conducting funerals, etc. Has a management responsibility in the local church and can conduct religious services. So these are 5 factors that are important to understand who, for federal tax purposes, they consider a minister. And why is this important? Well, they would be eligible for the parsonage or clergy allowance. We talked about that in the last webinar, which is available through ICON or through my website. They're also eligible for exemption from self-employment taxes if they meet certain conditions, which means they have to file the 4361 within 2 years of making the first $400 of income from ministry. But they are eligible for that exemption. They are self-employed for self-employment taxes or paying the Social Security. They are considered self-employed, period. A minister is. And they are exempt from income tax withholding. They can pay it as a quarterly estimate, just like a self-employed person pays quarterly estimates. So they don't have to have the church withhold federal income tax. Church wouldn't be withholding anything for Social Security nor paying the church's side of the Social Security, half of the Social Security, nor would pastor could just say don't withhold any federal income tax either. Just give me the gross and then I'll take care of it myself. So they can do that, and they can also pay that then as quarterly estimate. Most of the time that doesn't work real well. Most of the time I found out the pastor doesn't pay any quarterly in. We get down to the end of the year and he owes $5,000 or $6,000, $7,000 and they don't really have the money. So I normally try to encourage them to withhold or let the church withhold the federal income tax and then add some to it to cover, if they're in Social Security, to cover the Social Security, which they can do, and add, say, well, well, just withhold my, whatever the federal income tax would be, withholding would be, and add $300 a month to that, or $100 a paycheck, and that'll help cover what I will owe at the end of the year in Social Security taxes. But you have to be careful in this recognition as a minister when you look at this. One is, does the bylaws or charter of your church, if it doesn't authorize the church to ordain, commission, or license, do they or don't they? What's in your bylaws? Truth of the matter is, a lot of people don't know what's in their bylaws when it comes to this section. If you ordain, commission, or license that minister in the church, does your parent organization, if you have one, if they do not recognize that action, you have to be careful there. If they don't recognize it, the IRS isn't going to recognize it either. The church does not have an established history of doing this. Church doesn't normally do this, or maybe they've never done this before, but now they do this. I'm going to give you an example of, when I'm done with this next one here, of what some people have tried to do. And there is no change in job description or duties. Now what's happened, especially over the last 10 years, is some churches have gone in there and they got a music minister part-time, just conducting the worship service, the music during the worship service, or maybe the choir. They'll go out there and commission him to do that job, and then give him a parson's allowance so he doesn't have to pay, or clergy allowance so he doesn't have to pay taxes on that portion of what they're paying him, and then he tries to sign up with the 4361 so he doesn't pay Social Security taxes. So anyway, so the IRS says no, that's not going to happen. That's why you got to go back, look carefully at these 5 requirements, and look at these 4 areas of saying, do I meet up with these on that person? We've had that, churches try to do that with Sunday school teachers, with janitors, with secretaries, etc. So again, IRS will look at that if they audit you. Let's talk quickly about reporting requirements. No matter what, churches have to complete the W-2s. Churches must also complete the 941s, which is your quarterly, or your 945s, which is an annual statement. The IRS will let you know. Most churches fall under the 941s, the quarterly. A few with very little payroll might just have the annual statement. Must make all deposits on time and complete all year-end reports as necessary. This is requirements. All state requirements must be met. Some states you have workers' comp. In the state of Ohio, ministers are exempt from workers' comp, but can be signed into workers' comp if the church wants to pay workers' comp on them. Other states, it works different. Unemployment tax. In the state of Ohio, there's no unemployment tax. A lot of states, there is not unemployment tax. But like the state of New York, in some cases, in most cases, there is a type of an unemployment tax there. And then the state and local withholding. The states that have state income tax, you're going to have to withhold even if you're not withholding federal on anyone, you might have to still set up a state income tax account and withhold the state and local. Due dates. All federal and most states, our quarterly filings are due by the end of the month following the end of the quarter. So end of the quarter is March. Most quarterly filings are then due by the end of April. Next quarter is done at end of June. You must have these filings in by the end of July. It doesn't matter what your fiscal year is. We sometimes see churches or ministries with a fiscal year of, let's say, from June 1st until May 30th, or September 1st until August 31st. It doesn't matter. Payroll is always on a regular calendar year from January 1st through the end of December 31st. So everything is done by quarterly or quarters in that regular calendar year. Now, some states do have some month-ending due dates that are different. There are a few that their due dates might be 45 days after the end of a quarter, where you have to get that paid in, or maybe even later than that. In some cases, like workers' comp in some states, might be a little bit later than that. Might be you got like 2 months to pay to get that paid by the time you file your report. So you have to look carefully at what your due dates are, especially at the state level. Year-end due dates. Fourth quarter 941 is due at the end of January, period. You have to get that in. W-2s must be given to the employee or employees by February 1st after the end of the year, and a copy with the W-3 to the Social Security Administration before March 1st. So those are requirements on the W-2s. When we look at 1099s, must be given to the individuals by February 1st. I know people are going to come up and say, well, I don't get 1099s till February. Well, that's true. And the penalties on providing these late is so low that a lot of businesses just really don't worry about it. But it's supposed to be by February 1st after the end of the year, and a copy with the 1096, which is the transmittal form, just kind of adds everything up, just like the W-3 is a transmittal form, to the IRS before March 1st. Now, if it's electronically filed through, like we do a number of churches 1099s for them, and we electronically file, we actually are given a little bit more time to electronically file that than March 1st, but normally if it's all done, we just make sure it's accurate and stuff, and then we get it in right away. Each state has different due dates for reporting and filing requirements for this. Some piggyback off the federal, some have their own ways of doing it. So each state has to be looked at what their requirements are. When we talk about other church workers, we're really talking about secretaries, janitors, and other part-time people that may be there. The IRS will use the same test as we talked about, and that was used by the IRS and the courts. They're going to use the same test. Most should be handled like any other employee at any other businesses. That's basically what it is. Secretaries are secretaries. It's hard to make a secretary a self-employed person when she comes in for 10 hours a week at the church and they don't have a business card. They're not doing this for multiple places of business or churches or nothing else. They're just there for the church. You really can't make them self-employed. But most should be handled like any other employee in any other business. If there is reclassification of an employee, penalties and additional taxes will be leveled against the church. They lose their business deductions. This is employee will lose their business deductions that they have taken and will be redirected and put on their Schedule A subject to the 2% floor. And if you can't itemize, which a lot of pastors don't itemize, you may lose these deductions. And the amount owed for Social Security, if they're in Social Security, would increase. So there's not only penalties and additional taxes that are levied against the church, that person that was self-employed, they got reclassified as employee, will end up paying more taxes than what they did as filing as self-employed. But let's look at some of these penalties. Again, you'll have a set of these slides so you can look at these in more detail. But if you don't withhold payroll taxes, the employer is liable for the full amount, which then can be deducted from future wages paid to the same employee. So if you don't withhold the payroll taxes, you're liable for it. But if it involves like one employee, you can deduct that from future wages that's paid to that. Now, if you fail to file the correct information return, like your 1099s or your W-2s with the IRS or the workers, or to the workers by the due date, there's really a three-tiered penalty here, and that's $30 per return if a corrected return is filed within 30 days after the due date, $60 if it's filed by August 1st, $100 if it's filed after August 1st. In case of intentional disregard, a filing requirement penalty of $250 per return, or 10% of the total amount of items required to be reported correctly, whichever is larger. This also includes a failure to report all required information on the return, including incorrect information on a return. This also includes having a telephone number, like on your 1096, that's a transmittal form that goes with the 1099s, and they're expecting a telephone number there. They have a question to call. And I see a lot of these being done without a telephone number on that 1096. If you don't insert the taxpayer's identification number or the employer identification number on a return, it's a $50 per return or statement. Failure to make timely deposits of payroll taxes is four-tiered, and it can get pretty hefty down there. You look at 2% if the underpayment of failure is not corrected not more than 5 days after the due date, and it goes to 5%, and it goes to 10%, all the way up to 15%. So it's important to make your deposits timely. This is why in today's world you almost have to do it electronically, and you almost have to use some type of payroll company anymore to get this done correctly and timely. Willful failure to withhold or deposit payroll taxes. Well, you can have a civil penalty equal to 100% of taxes not withheld or deposited assessed against either an employee or employer or its officers. And that may also apply to volunteer officers or directors of the nonprofit organization. This may also include your secretary or your volunteer treasurer. This is a willful failure to withhold or deposit payroll taxes. That's where, well, we don't want to mess with this. We don't want to set up an account. We'll give them a W-2. Earners are not going to withhold. And I've run into churches that said, we're not doing this. That's too much work. And states have their own penalties on this, but I find a number of churches I run across, well, person might live in the state next to them and they don't want to withhold for that state. Like they work here in Ohio but live in Kentucky. Well, they don't want to withhold for Kentucky, so they just don't withhold. Well, Kentucky has its own little rules on that of you not withholding. So again, it becomes very important. This can be a civil penalty. Willful failure to withhold. Willful attempt to evade or defeat tax. That's a felony with criminal penalty up to $100,000. And to the church could be up to $500,000, and imprisonment up to 5 years or both. Willful failure to withhold and deposit payroll taxes. This is a felony. So you not only have some of the issues with this, but this can be a felony in addition to the civil penalties, and can have up to 5 years in prison and or a $10,000 fine, both. And this could and will generally apply to officers of the organization. Then you have the willful failure to file a return, pay a tax, supply required information, provide W-2s to employees, or include false information on the W-2s, providing false return to the IRS. These are all misdemeanors. With criminal, I say I got misspelling there, criminal penalties up to $100,000 and up to a year in prison or both. There's a pretty good breakdown on this, but that's the max on this. And like I said, I brought up mostly the penalty in the worst case scenario. There are other ways that these penalties may be less or non-existent, like for a reasonable cause that you didn't get something filed on time, and they'll accept that. Again, remember, states have their own penalties and will assess them as they deem necessary, and some states are pretty good at this. Relief provisions. If you have a reasonable basis for not treating a worker as an employee, again, you may be relieved from having to pay employment taxes for that worker. To get that relief, you must file all required federal information returns on a basis consistent with your treatment of the worker. You must not have treated any worker holding a substantially similar position as an employee for periods beginning after 1977. So you can't treat one person different than another person basically doing the same job, trying to treat one as employee and another one as self-employed. But there are some relief provisions under this, and looking at publication 1976, section 530, it'll tell you what those are. IRS also has a volunteer classification settlement program. Again, going up to the website I had given you earlier at the IRS, you'll see the volunteer classification settlement program. You can click on that if you have the more current PowerPoint 2013. If you have the PowerPoint slides, open it up in your PowerPoint. You can click on that. It'll take you to that. It's an optional program that provides a taxpayer with an opportunity to reclassify their workers as employees for future tax periods for employment tax purposes with partial relief from the federal employment taxes for eligible. So basically there's a volunteer program to help you meet these eligibility requirements. You must apply for it, and you must enter into a closing agreement. And basically what this is kind of saying, okay, I messed up, I want to get this corrected, let's get it corrected. You might owe some back taxes that should have been withheld, but normally, not saying all the time, not saying this may even happen, but sometimes the penalties is greatly reduced to just get you on the right track. IRS does recognize that even though you're responsible, understand how to do this correctly, that you're responsible, make sure it gets done correctly, that a lot of times nonprofits and ministry type organizations, churches, a lot of times just don't understand and don't get with someone to be able to understand how to do this properly and have a mess on their hands that need to get straightened out. So they do have this program now, the Volunteer Classification Resettlement Program. So we can take a few questions. Some of the rules are just keep them general without personal information. We don't need a lot of personal information. And again, some questions and circumstances may need further consulting. Basically, what you try to give us or the question you're asking might need a lot more. I might have to ask, or someone might have to ask a number of questions to really clarify exactly what is going on to be able to give a proper answer, or at least an idea of what might be the next steps that you might have to do. Remember, if you have been doing something wrong, you need to just basically stop, move forward to correct it as soon as possible, and then just move on and go forward. The IRS looks to get things that especially nonprofits are doing wrong corrected, and that's what they're looking for, especially when you self-correct it and move on. So anyway, Jay, if you want to take over.
Oh, okay, thanks, Doug. A lot of information there. As Doug said, it can be confusing. There are a few questions in the T. I will say, though, some of these are very specific questions. What I'm going to suggest on some of these questions is when you guys get these slides, which I'm thinking Doug could probably provide those pretty quickly to me since they're already done, is to actually go down through those tests and literally, you know, I have to do a little bit of legwork there, but literally answer each one of those questions for whoever you have doing work for you and see what conclusion you come to. And once you've done that, if there's still some questions about that, Doug, do you have a contact screen?
The next, yes, hold on a minute.
The next slide.
There you go.
You know, once you've gone through those questions, you can, you know, always contact Doug either via email or by the office. And if he looked over those questions answered by you, he may have additional questions, but I would assume that he would probably be able to know just by those questions being answered how that person's classified. I don't want to put words in his mouth, but I would think that those are probably the first questions he's going to ask you anyway as soon as you're trying to figure out, should we classify this person differently or not. Am I correct, Doug?
Yeah, that would be correct. And IRS actually has a couple forms that can be, information can be put on, submitted to them, and let them, you know, in their way, again, their bias towards employees, but there is a way that we can sort this out. Normally the employer doesn't fill out one of those forms, or it's an employee that's being treated as self-employed that believes they should be an employee will fill out one of those forms, send it to the IRS, and then the IRS will then come back and reclassify them. So organizations need to understand that too. An employee could file a request with the IRS to review their status, and then the IRS says, well, this should be an employee, then they're going to come in and reclassify, and then you have a problem on your hands too at that point.
Yeah, and that does lead us to one question from Mary about, you know, she's talking about she believes someone should be classified as an employee, not an independent contractor. So her question was, you know, if the pastor agrees, do we change her mid-year or wait until 2016 to change her status? And there's a few things that Doug did go over, and he can correct me if I'm wrong. The one thing is that was that last comment. Remember to try to correct it as soon as possible and move on because the IRS looks favorably to people that self-correct themselves. And then the other thing that you brought up right at the end was that kind of the amnesty program there to reclassify people. I think if they kind of fell under those requirements, they would probably have a lot less issues reclassifying that person mid-year versus waiting until 2016. Is that correct, Doug?
That is correct. And if it's during the year, in some cases, we can actually go back, amend the 941s, and actually start from the beginning of the year. They were paid X number of dollars. So what we would do is go back and then go through the payroll as if they were paid through the payroll system as a W-2. We look at the calculations. We just wouldn't do any withholding for the first part of the year, zero withholding, and then would just make that adjustment so they would only get a W-2 at the end of the year versus a W-2 and a 1099. There's a little bit of math in there, a little bit of calculation, but that's something that you know, we have done in the past just to try to keep it the same for the whole year. You know.
Exactly.
Yeah, if they got 50 employees, that might get a little bit hard to do. And you know, a lot of times one or two or something like that isn't that difficult to kind of go backwards and then bring it forward.
Correct. Okay. You know, there's another question here. I don't think this can be done. It's from Dale. Can we, and he has in parentheses, the church, in other words, I'm thinking he means the members, contribute to a 401k for the employee even though the employee does not contribute?
Well, not so much. I mean, there's new rules for nonprofits of 401ks, but the church could do something with a retirement plan or a deferred comp plan or 403b, which is normally the vehicle that's used with nonprofit organizations. And but again, sometimes I question that. I say, okay, if you want to do that, there's some other vehicles depending on the dollar amount, you know, that might make more sense without all the criteria that sometimes a small church has to jump through just to put some money aside. Right. Yeah. On that.
Okay. I did want to bring up one point that you brought up, but I just want to draw something to it from a background of hearing, like even our employer here, is you had in red something that said document each factor to use coming up with a determination. And I find that whenever you're dealing with government agencies, whether it's the IRS or anybody, if you're able to provide the reasoning that you had at the time that decision was being made, it's a lot easier for you, even if you're wrong, even if they say, you know what, we'd understand why you reasoned that way, but you are incorrect, right? I find that most of the time the agencies are much more lenient with you and say, you know what, you just need to get it right now and let's move on, because they understand that if you are able to give them that written reason of why you did that, you know, say for example, if I was trying to determine this employee or self-employee or self-employed, and I went through the 20 questions, I went through the 7 questions, I went through the 12 questions with this person in my organization, and we answered all those questions, and then we came up with a, you know, a 1 or 2 page reasoning for the entire relationship with that person. If I'm able to provide that to the IRS on an audit, the IRS be like, well, we can see why you reasoned that way, but you're going to have to correct because we don't agree with you. I would think that the penalties would be a lot less, if there are even any, at that point. Is that kind of what you see in the field?
Well, it could be. Again, it kind of depends on who's looking and why they're looking in the first place. Documentation is important because it forces, if you already have a document, you went down through this and you've documented all these places, you put reasoning behind it, the IRS now has to respond to that directly and saying, well, no, we disagree with this because of this, this, and this, and they'll put that out there. So it makes them have to really respond to your points and counter those points with their reasoning.
It
So
puts an onus on them, is what you're saying. It basically, instead of them being on the accusing side, you're basically forcing them to come up with a reason why you are wrong, because you have hopefully a correct responses to each one of those.
Right. It makes it hard for them to just say, well, no, we're not going to allow this, because they might throw a couple of things, they're just not going to allow it, and they can walk away. Now when you got the reasoning, they can say, well, we're not going to allow it, but they, even if they don't directly respond, that agent doesn't, then I'll ask for their manager, because they're going to have to come back and say, okay, well, here's the points that you used, but here's the reason why we're not agreeing with that. But then you might even have to take it a step above that. Again, the default is W-2, employee. Yeah. That's period. That's the default. When you want to move them to self-employed status, that's where you really have to prove it. You don't have to do this. If you're going to treat them as an employee, you don't have to do anything. You don't even have to look at these factor tests. That's a non-issue. But if you're going to try to treat them as self-employed, then that's where you come into having to really document and paying attention to what you're doing, even looking at your bylaws. So what does it say about this? What does it say about pastor? What does it say about us hiring a pastor or firing a pastor? What does it say about our relationship with the pastor in the bylaws? Because that would be also one of the first things IRS looks at is, what do your bylaws say? Are you even following your bylaws? Of course, that's another whole issue on governance that we may cover in a future webinar. But that's one of the things that they're really keyed in on.
Yeah, exactly. Another one is Doug stated that a pastor must be considered self-employed and not pay Social Security and Medicare. One of our pastors has chosen to pay these. Is this a problem?
Well, pastor by IRS code, minister he's paying his Social Security, but he pays it on his personal tax return, the 1040, with the SE form. It does not show on his W-2. And a lot of times it's just a misunderstanding. They don't understand that, and it's never been shown to them. That maybe they've come from a place that's not the way they've been doing it, and we see that off and on. Where I'll end up doing the taxes for a new pastor, and it's all there, and then it might take me 2 years to explain to the board and everyone else that's not the way it should be done. And of course, the IRS gets a W-2. They don't know whether that person's a pastor or if that person's the janitor. They don't actually notice that just because it's on a W-2. But those should be blank. Medicare, Social Security boxes should be blank, and they pay it as self-employed, on their 1040, etc. Now, a lot of churches will up the gross wages for the pastor by 7.65% and add it to his wages to help cover half of the Social Security. I know a lot of churches will do that. Yeah. And that, they say, well, okay, we understand that, but we're going to pay, like my church, when we brought in the new pastor, after the last one had a couple strokes and just couldn't pastor anymore, that was part of it. They knew that he wouldn't, we're not withholding, the Social Security, and the church isn't paying half of it. So after they got everything done, they added the 7.65% on top of his income, and knowing that he would be paying the full 15.3%.
Okay. Yeah, it's if they're doing that now, where one of the pastors is paying it, I'm assuming that they're going to have to put that on, though, at this point, right? Because he obviously has paid into it, or had the employer withheld from his pay. The way the question is worded, it kind of sounds like he's paying his portion out of the paycheck. So they would probably have to put it at this point, unless they change and not pay and not withhold that anymore from him.
No, we could go back, and we'd have to amend the 941s, but we could go back and move everything that was withheld. His 7.65% that was what was withheld from his check we could take his 7.65% and add it to his federal withholding. And then add the 7.65% that the church paid to his income and his federal withholding. And then that would zero out, but we'd have to go back and redo the 941s also for the first, second quarter.
Yeah.
And we've done that in the past too. We just shifted everything, over to the federal withholding box. And
like I said, if there's any churches out there that think that they have to do this, I would strongly suggest you contact either Doug or someone in that capacity, an enrolled agent, if you have a local one, because some of this stuff can get complex really quick when you start moving taxes around and having to recalculate things and getting the right forms to file because you got to do an amended, like I heard Doug kind of use that word, that there's all these forms, but then there's the amended version of all these forms that you have to do if you make a correction as well. So I know my employer had to do that with our W-2s the one year, had to file an amended W-2 on us. So I think it's a W-2X or something like that. I'm not sure what the form is, but it's not the regular W-2. I can tell you that. It's kind of different. And then we do have a question from Kevin. So what happens when an individual would be classified as an employee based on some factors and as a contractor based on others? And it kind of goes back, Doug, doesn't it go back to, you kind of got to go down those factor tests. And if that's truly the case that you're coming up with, at that point you got to fall back on your reasoning and document why that person should be self-employed in case you're ever audited. I mean, right?
Yeah, that's correct. Again, the default's a W-2 employee, and again, in most cases, when you get right down the bottom line, it's difficult, to put pastors, associate pastors, music ministers, etc., as self-employed. Again, I haven't run across a church yet that gives a pastor X number of dollars, and the pastor's hiring his secretary out of that money, hiring his music minister out of that money to help him conduct the services, etc. I've just never run across that. Now, there might be some instances out there that's actually happening, but I've not.
Yeah.
Most pastors don't, they don't have a loss, they don't suffer losses, from church activity, or their income may go up and down according to the church's offerings, from one year to the next, one budget year to the next. But when I look at some of those factors, it really gets shaky of trying to keep them self-employed, on that side of it. That's why basically it's a default, is basically an employee. If you're trying to move in another direction, you better have some pretty good reasoning behind that, and really some thought process behind it. For a regular nonprofit, it's not like a regular business. With a regular business, trying to classify an employee as a self-employed, they don't have to pay the workers' comp, they don't have to pay state unemployment, they don't have to pay federal unemployment, and some of the fringe benefits they wouldn't have to pay versus having a W-2. With a church, sometimes it's the same thing. They don't have to pay the half of the Social Security. And they might not give that employee the other half, the half that the church would have paid if they were classified as an employee. But then some of the fringe benefits. But again, when it gets down to it, if they're self-employed, they don't have to pay the workers' comp. If they have to pay workers' comp in the state, they don't have to pay the unemployment. Most nonprofits don't pay unemployment anyhow, federal, and normally not the state either, but there are a few states that might happen. So there are some budgetary dollar advantages to the church to try to get them as self-employed, but you better have some pretty good reasoning, for that.
Yeah. So the default is if you're really that unsure about it, you should probably just do a W-2 on it and make the IRS happy basically, so they don't bother you. Is really what it comes down to.
And it's a whole lot more paperwork as an employee. They got to track the employee. They got paperwork on file. They have to issue the W-2s. They have to do the quarterly 941s. Then they may have some state filing, requirements You know, like in Ohio, it's IT 501, which is a quarterly filing. Then they got the 941. They're with like the payroll processing service we use and help churches with, and others that are out there. They normally do all of this electronically now anyhow. We do it all electronically, so a lot of that stuff you don't even mess with anymore. It's just done electronically. The money comes directly out of your checking account and it's done. And that's the way it should be. That keeps you out of problems. You don't have the penalties. You don't have the late filing fees, etc. You know, and and the stuff is getting done on a regular basis. But there's a lot more paperwork than just issuing that 1099 at the end of the year.
Exactly. So I think we're a little over time. I apologize for that for all of our attendees. I think it's a lot of good information, though, and I know it'll help churches in the future. And like I said, Doug is he's got a slide up there. Feel free. He has a lot of information out on his webpage for nonprofits. I've read through a good majority of it. I actually learned things as well. Don't think we're the experts here at Icon Systems. We try to be, but that just doesn't happen. So we're always privileged to learn from people that are in the field that know a lot more than we do when it comes to the payroll, accounting, and how to do these things. So again, I'll let Doug kind of say his closing comments if he has any, and at that point we'll go ahead and close the webinar and forward any other questions that you think weren't answered. Go ahead and if you wanted to contact Doug at his email address with your specific questions, and he can help you out and go from there. Go ahead, Doug.
Okay. Well, thank you for attending. If you do have any questions, just send me an email. That's a lot of times the best way for the initial contact, and just kind of specify in there what you would like to discuss. And give me also time during the week or certain days of the week that might be the best time to call you back, and I'll try to honor that period of time, or send you an email back and set an actual conference time call. That works well with me on that. Just remember, don't be afraid of the penalties and all of that if you've been doing it wrong. The biggest thing is don't continue to do it wrong, because at some point that's probably going to be worse than just stopping right now, correcting it, and going on. So just keep that in mind. Anyway, again, appreciate your attendance, and I hope we can be of help to you in some of the future webinars that we're planning.
Yeah. Thank you all. Thank you, Doug. Your knowledge is far greater than our collective here on stuff. So we thank you very much for doing this webinar for the clients of IconCMO.